This podcast is solely for the attention of institutional, professional, qualified, or sophisticated investors and distributors.
Hi everyone, today we're going to talk about the impact of the decarbonization of the economy on the equity markets. In particular, we will see how the equity markets integrate the evolution of the carbon price in the valuation of European corporations. First of all, let's recall how the emissions trading system works in the European Union. This emissions trading system was launched in 2005. Its rules have been revised several times, and it has gradually become a central tool of the European climate policy. Its aim is to reduce greenhouse gases emissions for a number of sectors, currently electricity generations, steel, oil refineries, cement, chemicals, and since 2012, aviation with airlines for intra-European commercial flights. As part of the Fit for 55 package, there are also plans to add maritime transport to the existing emissions trading system and to create a separate trading system for road transport and construction. The principle of this trading system is the following. A cap on the aggregate amount of greenhouse gases emissions is set each year for the participating sectors, and this cap is reduced each year. Each participating facility receives free allowances or has to purchase a given amount of them. Once the allowances have been allocated to the facilities, two scenarios arise. In the first case, the company's greenhouse gases emissions are lower than the allocated allowances. The company can resell them on the carbon market or decide to keep them for later. In the second case, the company's greenhouse gases emissions are greater than the allocated allowances. The company then has to buy additional allowances on the carbon market. If we look at the evolution of emissions allowances prices, they have closely followed that of coal and natural gas prices in recent years. In November 2022, they were worth around 75 euros per ton of CO2, that is to say more than 7 times the average level of the decade 2010. The question that we are going to focus on now is what impact does this increase in the price of emissions allowances have on stock market prices? For this, we will rely on a working paper that the IMF has just published on the subject. The authors have compiled a database of European listed companies subject to greenhouse gases emission allowances. They compiled a list of 5,800 distinct companies with an account on the emission trading system over the period 2013-2021. Of these, 2,112 were listed companies, but several of them were controlled by the same parent company, and taking this into account, the authors arrived at a sample of 634 companies. Excluding companies for which data on share price or turnover are missing, they arrived at a sample of 338 listed European companies. This study is therefore much more comprehensive than previous studies on the link between carbon price and stock market performances, which barely contain dozens of listed companies. Finally, it can be noted that the sample is well diversified in terms of countries and sectors. Let's move on to the results. The authors of this study have thus highlighted a strong negative relationship, all other things being equal, between weekly changes in the price of emission allowances and weekly equity returns. The very interesting point here is that this relationship strongly depends on the importance of the carbon cost in relation to the turnover. The greater the carbon cost paid as a share of its turnover, the more its share price is penalized when the price of allowances increases, which seems quite logical. It should be emphasized here that this is the carbon cost that counts and not the absolute level of greenhouse gases emissions of each company. Focusing on the most recent period, the authors conclude that a 1% increase in the price of allowances lowers the share price of the most polluting companies by 0.21%, all other things being equal. This may not seem like much, but it's really a lot if we take into account the fact that the price of allowances was 200% higher in November 2022 compared to the beginning of 2020. For the authors, this therefore provides a strong and explicit incentive for shareholders and executive managers to decarbonize their activities. Thank you for listening and talk to you soon.
All comments and analysis reflect CPR AM views on market conditions and its evolution, according to information known at the time. As a result of the simplified nature of the information contained in this document, that information is necessarily partial and incomplete.